the trading commandments. I just got the top 3 trading commandments right here, but this is a little preview, a little sneak peek. So these are some of the things that I think is a no-go in trading, or like just like a rules of thumbs that are like the laws of trading. I still do them. I still make these mistakes, but just a rule of thumb, no matter what you trade, what industry you trade in, what niche you trade in, this is really important. And it's always funny. Anything we talk about like trading wise is extremely applicable to life and just business. Yeah. So
real quick, you know, it would be tough, like visual wise. Yeah. If you put that, that chart, if you put it onto like a stone tablet, like, that'd be tough.
That would be tough.
But
bro, I was actually thinking about a thumbnail. Like, I want to make a YouTube video and I want to put the trading commandments in, like how you just said. Yeah. I didn't think about it with a chart. That's smart. Yeah. But I was thinking about having like a tablet in the thumbnail, you know, like the 10 commandments, the 10 trading commandments. Anyways,
the right place.
Number 1, you fail to plan, you plan to fail. All right. This goes, you know, I can relate a lot of these ideas to when I was in school, you know, winging it. It works until it doesn't. And anyways, trading without a plan. One of the biggest mistakes traders make is not having a well-defined trading plan. We talked about this a lot of times. I like to have the mental framework of if this happens, then I'm going to do this. But if this happens, then I'm going to do this. And that's pretty much the idea of trading, because there's 2 outcomes. So for the most part, you're going to have two plans to go off of. If this happens, then I'm going to do this. But if this happens, then I'm going to do this. If things go well, then I'm going to do this. But if things go south, then I'm going to do this. And like, how can we relate that to business? All right. If the business, you know, is up X amount of revenue on the month, excuse me, then, we're going to start scaling by doing this. But if it's not at a certain period where we would want it, then we're going to do this plan instead. So it's like having a rainy day plan, but it's having a plan so you know what to do. So you're not just caught up in the moment. And then a trading plan should include your entry, exit strategies, risk management rules, and clear goals. And again, all of these things can just apply to pretty much anything in life. But yeah, the one thing that's always stuck with me that I've heard before, I don't know where I've heard it, but failing to plan is planning to fail. And that's pretty true. Yeah. Anything you want to add to this slide before we hop on to the next one?
No, I think you summed it up pretty well. That last quote sounded like something Dad would have like put on a roll.
Yeah, for real, bro. Honestly.
No, that's definitely. Wait, so the trading commandment is no game plan? Should it just be?
Yeah, I know. I was gonna have to. I thought about that when I was making the slides too. I'm gonna have to rearrange the title, because I was even thinking about that when I hop on with Dr. Jim. So it's gonna be, what would a better title for this to be?
Have a game plan! !
No. Oh yeah. Oh,
you know what I mean? Because
yeah, bro, 100%. I don't know why I was thinking about that.
Yeah, you know what I'm saying. Though?
One of the commandments is no game plan.
Have no game plan.
If you're a DJ,
bro, you could do commandments and then like a opposite commandments. You know what I mean?
Oh, like, yeah, that's true. But yeah, that's true. But I do feel like the opposite is already implied.
Yeah, I was gonna say it's
yeah. See, that was a lapse in your thinking. Just how it was. Anyways, overleveraging. Using excessive leverage can lead to significant losses. It's important to manage your position size and avoid trading with too much leverage. This can apply to life, can apply to business. With business, what's a good example in business? Over leveraging, maybe allocating too much capital to one area of your business before seeing if there's going to be a return on that capital, depending on the area you allocate that capital. What else? What else in life can you apply over leveraging?
It's like if, say, like a lawyer puts an offer on the table that's too high, that they can't really take, or can't really, you know what I'm saying? Like, can't really
Yeah, you can't. Yeah.
It's just overextending yourself in any.
It's like sticking your neck out, just like chill. Exactly yeah. And this is why we were talking about marriage earlier. This is why you got to go through a dating phase. You got to get engaged. You got to do this. You can't just over leverage. Boom. We getting married. It's like, all right, bro, you got to manage your risk. And you entered full size already. So good luck, buddy. Anyways, anything you want to add before we hop on to the next one? We're just gonna go over the first three, and then we're gonna jump into the platform.
No, that looks solid. It's a good one.
Thanks. Ignoring risk management. Ignoring risk management. Risk management is crucial in trading. Don't risk more than you can afford to lose. This is it's like a lot of these is like, well, duh, you know, almost every point, but it is really something to think about. And then also, I know another thing that's it's always been that way within the community, but like some people will have like signal chats. I'm getting in here, follow me in this. I'm going to cut my losses here. I'm going to cut my losses there. I'm going to take profit here. And it's like, you might be like, that might make sense, but it's like trading to making trading decisions has external factors based off of where you are in life, the things you have to do, things you got to pay for, things you know, everybody's situation is different. So this is one thing that's a little unique when it comes down to trading. What you can afford to lose is going to be different for everybody else. So if somebody is risking, you know, to this point on the chart, or they're putting on this trade with this amount of risk, it might be a good trade, but it's like, if that trade does go south, it's going to definitely hurt you and your account size and your personal emotions more than it's going to affect somebody else. Even if somebody has the same account size as somebody else, say two people have $10,000, the other person has $10,000, they still, even though it's the same account size, they both still may react differently to a $200 loss. To one guy, it might be like, paper cut. To another guy, it might really affect him emotionally. And it's like, how do you know something affects you emotionally? You just look at your behavior. It's like, okay, this did affect me a little emotionally. Even if you're confused, like, I think I am comfortable with losing X amount. It's like, okay, take that size loss, and then what is your behaviors and your actions look afterwards? Are you sizing up into trades more to try and make that back? Are you over trading now? Are you doing any of those things? So you can just kind of really see and emphasize the point on how risking what you can personally afford to lose is such a personal such a personal thing. That's why trading is so unique to the individual. And then a hot take when trading pure direction. Excuse me. So I know you might hear when trading pure direction. So, you know, before I started selling options, I never specified when I was saying things like when trading pure direction, because before I started selling options with Tasty Trade, the only thing I knew was up or down. The only thing I knew you could make or lose money was up or down. But I specify and I put in trading pure direction because, again, when you're selling options, you're not necessarily selling pure direction, because like we've talked about before, a stock can move completely sideways and you can still make money on the trade, right? So, but if you're trading something like futures or you're trading something like stock, that is only pure direction. That's a pure directional trade strategy, because with futures and stock, you can't make money if it just goes sideways. It's either above the point where you bought or it's below the point you bought. Very binary. It's one or the other. But again, there's that little gray area when you're selling options to where because you can make money based off of time value, there's more than one direction you can make money, and it doesn't have to be directional. So that's why I put the hot take. And the reason why I put hot take, you might think like setting stop loss orders to limit potential losses isn't a hot take to you, because that's all we've ever talked about. Even before Tasty, we've only known pure direction. So setting a stop loss, when you hear me say that, you're probably like, it's like, bro, that ain't no hot take. But in the eyes of selling options and in the realm of just Tasty, that kind of is a hot take. And there's reasons for that, and we're not going to get into it. But some would argue setting a stop loss is a no-no. Like, you know, so anyways, I just wanted to clarify that. Did we? 1, 2, 3. Yeah. Anyways, those are the trading commandments that we have for the day.
I think one important thing to note is, though those seem very almost like common sense, like though they seem very simple and like beginner, those things stay relevant, I think, through your whole trading career, and they're things that will affect you regardless if you think so or not. Continuously while you're trading, like no matter how experienced you are. 100%. So, like, very important to just keep yourself in check, because I think with anything, just in general, this those things will fade, or not fade, but you will find yourself being indisciplined at one point.
Yeah, of course.
No one's perfect in trading. We're not robots, so it's very, very important just to keep reminding yourself of that.
Yeah, 100%.